Hi there, and good morning, and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah, and it's a day which looks like it might be in the green, though some of the early Asian risers were a bit of a mixed bag all over the place, really. But let's try and dissect what's happening across the world. So, first, the US markets and the NASDAQ had a big bang uptick. Now, this was, you could argue that this was anticipated because you can't have Apple falling 10, 15, 20% without there being a bounce back, right? That would happen. I mean, I'm not mentioning Tesla out here because it's difficult to value that, but some of the others had fallen quite a bit, so a bounce was expected. But on Monday, we had a serious 2.4% correction. The market corrected 10%, technically fell into a territory which is considered by a lot of pundits as getting into a correction territory, and then this very sharp bounce. Yields cooled off, commodity prices cooled off, and that's why I keep on saying that there's this wonderful chart, by the way, on the terminal, which shows about how yields are also hitting some points of resistances. But look at this. The 10-year yield are holding below the resistance of around 1.68%. Now, until some time, we didn't know that this was a resistance level as well. But as you can see charts, it probably proves to be a bit of a resistance level. But the point that I'm trying to make out here is that it's just become so unpredictable. Every time you think that there's a trend getting formed, the market reverses. It's catching shorts and long positions on the wrong foot almost every third day, and it's becoming damn difficult to trade. But it's exciting times for sure. Now, so in light of all of this, what is Asia expected to do today? You would expect that the Asian screen would have a fair degree of green, if not a very large degree of green. Like I said, some of the early risers were a mixed bag. There's not a big gung-ho reaction to this US move, and ASX in particular is fairly flattish. Mind you, US futures too are holding flat actually after this big surge yesterday. The SGX Nifty, and we had a surge yesterday, right? We had the bank Nifty and the technology shares doing rather well. So we had a bit of a move done yesterday. We might start off about 0.25% to 0.5% higher, so that the setup is not looking all that poor if you are a bull. So in fact, let's get to the trade setup. So keep in mind, in yesterday's session, what we had was that for the better part of the day, a lot of stocks were under the water. It's just that the last 1 hour really came up for the benchmarks in general as well, and for specific pockets like technology in particular, but the broader markets underperformed. I was looking at a few technical analyst predictions to try and see what level should one watch out for. Now, based on that, you may want to watch out for 15,150, 15,200 as key levels, because I think 3 notes suggested that a sustained move above these levels, I'm loosely using these levels. Somebody said 15,175, somebody said 15,212. So those levels are varying, right? Every analyst sees it differently. But between this range, I think if it sustains, then it could trigger a fresh up move, is what everybody says. And I think tech shares were very resilient in trade yesterday. And because of what NASDAQ has done, can show a very strong fresh up move. Now, banks were very good yesterday, and I think that is borne out from the fact that FIs were net buyers too. So the fund flows were positive, though you have to bear in mind that some of these could well be because of bulk deals that would have happened yesterday. I doubt that it is a fresh secondary market purchase of 2,800 crores that happened from the FI side. Some of it could well have been treasury stock purchase of BPCL or some others as well. So you never know that. So, but net, they put in some money to work in trade in the Indian markets yesterday. So if indeed we're likely to start off marginally higher, what are the top stocks that one should watch out for? I must admit, on the back of news flow, there is not too much to choose about, but for the QIP boys. So let's get those individual stock specific moves and discuss some of the stocks that should be in focus today. I'll start off with the QIP boys, and first up is AU Small Finance Bank. They have approved the launch of a QIP issue. The floor price will be 1181, which is about a 4.4% discount to Tuesday's closing price. Now, the board will meet later on to determine the QIP issue price. That's okay, but the floor price is 4.4%. So the point being, I mean, they've also said that the whole-time director Uttam Tibrewal intends to sell 10 lakh shares, starting personal commitments. But that notwithstanding, the fact that they are going to sell this at a small discount likely would mean that the stock could remain a bit under pressure. Remember, BPCL's case was the same yesterday. There was treasury stock not a fresh issue, but this is a fresh issue of QIP. Let's wait and watch how this works out. Godrej Properties is the other one which actually launched the QIP on at a slight premium to yesterday's closing price. Now keep in mind, Godrej came off a bit yesterday, which is why this seems to be a bit of a premium to yesterday's closing price, which was about 148 or thereabouts. Again, the board will meet on March 15 to decide the pricing, but that notwithstanding, the fact that they have launched it at a premium means that they would have sensed some demand for the stock, a block of shares coming in from Godrej Properties. And the reason why this is important is, if the Godrej QIP succeeds, I hear from bankers a bunch of real estate companies may want to hit the markets with QIP issues. So you never know if successful completion of Godrej would actually help some of the others as well. So watch out for sentiment around real estate in the session today. Could be interesting. Indian Bank is the third one. They've approved. They just approved. They've not launched, but they've approved raising 4,000 crores with the QIP route. So therefore, do watch out for this one as well. Speaking of funds and QIPs and treasury stocks, BPCL, I hear a lot of marquee names getting into BPCL. The official one yesterday was ICICI Prudential, a mutual fund, of course, 1.38 crore shares. That's a large one, in or around that treasury stock sale price. But I also hear a few other marquee HNI investors getting into the BPCL treasury stock book yesterday. Let's wait and watch what names come out, but this could be interesting. That aside, I would watch out for some of the stocks which, based on the delivery patterns that they've trading that they've done yesterday. So in Tube, there has to be a bulk deal because of this very high delivery percentage of 89%. But some of the others included a bunch of NBFCs, right, or financial names. So Edelweiss had a good move. JM Financial had a good move. Central Bank had a good move. And I want to highlight Canfin Homes because it moved. I think it moved up in part because of the Batliwala and Karani note, which stated that the stock had upsides of close to 80% over the course of the next 2 years. And they cited various reasons, including how well they managed the book, Canfin Homes, as a result of which I think this stock moved up and moved up very well, trended higher, closed almost as the high point of the day, and fairly good delivery volumes too. So good moves. Let's see if this lasts. Lastly, viewers, before I leave you, I want to mark, and I hurried through the trade setup because I wanted to mark two things. One is this. Some of you have asked for some interesting charts on the terminal. Here's one that stood out for me. Now, can you imagine the kind of selling that's happening in the Chinese stocks, as a result of which yesterday BloombergQuint put out this story. I would urge you to go and read that as well, wherein the state-owned funds are stepping in to buy some of the Chinese mainland stocks. But there's some serious pressure out there. And look at that, CSI 300. I mean, pretty strong outflows there. I think there's also another chart which says that the 2% up moves, 2% moves on the Chinese market are becoming a norm. So it's pretty interesting what's happening in that market. We of course stay obsessed with India, and rightly so, because our investments are in India. But it's pretty interesting to what's happening to some of the other markets as well. So this is one. The other, for which I don't have data, but I'll just read out to you. There's a very interesting report from Motilal Oswal, which of course is there on the BloombergQuint research report section. You might want to go in and read about it. But they are assessing the sectoral impact of the raw material cost uptick. And I think when I read that report in the morning, I think that two pockets which stood out. One of them was autos, because I'll tell you why. They say that for auto OEMs, which is the auto companies, raw material costs account for 68 to 72% for most OEMs. Can you imagine a hike in 68 to 72% of your raw material costs? I mean, that would be telling. So, which is why we've seen some of the auto companies hike prices. Will they be enough to offset the cost pressures? We don't know. And then they made this interesting point that auto ancillaries won't get impacted because it's a pass-through for them. So their margins are anyways low. They work on those margins and they have a pass-through clause built in. So auto ancillaries may not get impacted too much. Consumer durables may not get impacted too much because they have high prices. But the interesting point that they made is capital goods, wherein 40% of the order book for a lot of companies, including L&T, is fixed price, but it builds in escalation in when they bid for the project. Now, if some of the companies have in competitive bidding not built in the escalation in raw material cost, then their margins over the next 2 quarters might come under pressure. So it might be interesting to analyze some of the capital good companies in detail over the course of the next 2-3 weeks. But watch out for autos. There are price hikes, but there might be margin pressures big time in Q4. So that was the other interesting thing. Log on to BloombergQuint.com and try and read that report. It's a pretty interesting one. Anyways, that's the long and short of it. Watch out for some of the QIP boys. Watch out for some of the tech companies in particular today because of the big ferocious move that NASDAQ has had. And I'll watch out for the PSUs. They had a very bad day yesterday, but that pocket won't stay silent for long. Thanks so much for tuning into the Trade Setup. Have a great day ahead.